Hi, folks. I'm Bob Benny,
I'm Jesse Thompson.
and welcome to today's Bobcast from Bob Benny Wealth Management. Jesse and I are both certified financial planners, and today's topic is making the season brighter.
A charitable giving guide.
So,
If you have any questions while we're going through everything, you can type them in the bottom of your screen and we'll address them all at the end. Just a reminder to, if you're watching this on YouTube, to like and subscribe so that when we release new videos, you get notified, and it also helps the algorithm so we can help more people with this free information that we give out to. We also just want to remind everybody that these are ideas that we're talking about for charitable giving for next year. We're reaching a bunch of deadlines this year for when we can do different kinds of distributions and things like that, and kind of bottlenecked with that kind of thing for this year. And so these are ideas for next year. We just told the rest of our people here that we would tell everyone that. So
you
get a
wouldn't
bunch of new ideas.
deluge us with phone calls for all this. And anyway, hope you all have a Merry Christmas. Today we're going to be talking about giving. Our clients are some of the most generous and giving people that I've ever met. Some of them are just unbelievable. And it's really interesting to me in that there seems to be a correlation between the charitableness and the generosity of some of the people that we're thinking about and talking about, and the amount of money that God ends up giving. And it's been the same in many of our lives, that if you give money away, God gives you more to give away. And so we just recently had one pass away. It was a longtime client of about 25 years, and her husband had passed before her, and she passed, and bless her heart, they had a lot of money. They lived way below their means, like a lot of our clients do, and accumulated a lot of money, invested it wisely, and gave away a ton of money. The more they gave away, the more God gave them. And that's not why you should give money away. Of course, I'm not saying that, but we witnessed that. And this lady also gave of her time. She, up until even the last few years of her life, volunteered twice a month at the Matt Talbot Kitchen, and ended up dying in her mid 80s. And so anyway, we love charitable people and generous people, and we want to talk about some different types of things about giving and tax efficient gift strategies, that sort of thing. So the first thing I want to particularly talk about is tax efficient gift strategies. And so we're all about maximizing the amount of money that you get to keep, or that you get to keep to give away, and minimizing the amount of money that you have to give the federal government or the state government. So one of a common thing, and the first strategy we're going to talk about, is gifting from your IRA. So if you take money from an IRA, you got to pay taxes on it. You have you take 10,000 out of your IRA, you have to pay taxes on it. But if you then donate it to charity, as long as you itemize, you get to deduct that donation.
So it's a wash as far as the taxation goes of the withdrawal.
Yeah. But
that's for special ages. So that's between age 59 and a half, when you can start taking IRA withdrawals without having a big penalty, and age 70 and a half. And then there's a different thing that you can do at 70 and a half.
So the reason we're talking about this in the first place is because when President Trump made his tax cuts in 2019, and he changed things a little bit so that a lot of people wouldn't have to itemize, because he raised the standard deduction up. So many people that were itemizing before didn't have to itemize anymore, simplified their tax return. That's all fine and dandy. But if you're taking the standard deduction and you make a charitable contribution, you don't get to deduct it, because it's kind of estimated and counted in that standard deduction.
Unless you make a lot of charitable contributions.
Yeah, and then you would be itemizing.
Yes.
But if you don't itemize, you don't get to take you don't get to deduct money that you're giving to church or charity. So there's a special thing called a qualified charitable distribution that after age 70 and a half, you can make that gift from your IRA, the charitable contribution from your IRA, up to $100,000 a year if it's given directly out of the IRA to charity.
So you don't take it out, put it in your bank account, and then give it to the charity. It has to go, you have to specify that it goes directly from that IRA to the charity.
Yeah, we have a number of people that we've done this for this year and a couple of years past. But one of the advantages of doing that is it reduces your taxable income and reduces the size of your IRA a little bit, so that you don't have to so that your required minimum distribution the next year is not as high. You can actually do this with your required minimum distributions, can't you? So, if you have a required minimum distribution, let's say of an IRA.
The required minimum distribution you have to start taking those at age 73 from any IRAs.
Yeah, but let's say your required minimum distribution is whatever, $10,000, and you don't really need the money, and you really don't want to have to pay the taxes on the money. And you also have a charity that you want to give money to, a charity or a church, you can directly give that $10,000 from your IRA to the church. You don't have to pay any taxes on it, and it satisfies your required minimum distribution rule. That's pretty cool.
Yep. So that is an efficient way to give if you're going to give out of an IRA.
What's another way, Jesse? What would be another way of giving that's efficient, tax efficient?
Another way is to gift appreciated stock. So this is stock in what we would call a non-qualified account, or it's a non-retirement account, a non-IRA account. These types of accounts, if you buy an investment in this type of account, like a stock, you are taxed on any dividends that are paid from that investment. And you're also taxed if you go to sell the investment and the investment has had a gain, you're taxed on the gain when you go to sell.
It's called a capital gain.
It's called a capital gain. So I have an example here, a hypothetical example. Let's say that in a given year, you have one of these non-IRA accounts with some stock in it, and you want to give $10,000 to your church or a charity of your choice. So let's just say, hypothetically, to make things easy, you own $10,000 of XYZ stock. You bought it 5 years ago for only $3,000, all the shares that you own. Okay, so it has $7,000 of gain, where if you sold it, you would be taxed on that $7,000. So you say, well, I want to give $10,000 to my church, so I'm going to sell my $10,000 of stock, and then I'll just give the proceeds to the church. Well, the problem with that is that you have this taxable gain of $7,000. For most people, that $7,000 that's taxable, the tax that they're going to owe on it is 15%. That's the capital gain tax rate for probably most people. And they're going to owe $1,050 on that $7,000. So they get the itemized deduction if they itemize for their taxes of $10,000 that they gave to the church, but then they owe this tax of $1,050. So it's not the most efficient way to do it. There's a way better way to do it, which is you give that stock from your brokerage account directly to your church or directly to a charity instead of selling it. And the charity, because they're a charity, they don't have to pay any taxes when they go to sell it. They just get $10,000 worth of stock that they can sell, not pay any tax on. You don't have any tax owed because you didn't sell anything either. And then you get the itemized deduction of the full $10,000. So it's a much more efficient way of doing it. There's some other things that are really great about it. For example, we've done this with people who have a really high concentration of a highly appreciated stock in their portfolio that's grown a whole bunch and has a whole, if they were to sell off a portion of it, they would have a whole bunch of taxable gain in it. But it's also, you don't want to have as much of it as they have. It takes up too much of their portfolio. It's too risky, right? So you want to reduce the amount that they have in the portfolio. Well, an efficient way to do this, if they're big givers, is for them to give that stock instead of giving cash to the charity of their choice. Right. So
that's a real good idea. So another thing that some of our clients do that are very charitable and want to give a lot of money either during their life or after they pass away is they can set up their own family foundation. We've had a number of people do this, and you can do it through these things called donor advised funds. There's a number of different ones of them that are
Companies that
available.
offer them.
American Endowment Foundation is the one that we've always used. You create an account with the donor advised fund, the American Endowment Foundation, like I said, is the one we use. It's titled the Mr. and Mrs. So-and-so Family Foundation, or whatever, the Bob and Angela Benny Family Foundation. That's the title of the account. And you donate a chunk there, like it could be appreciated stock, or it could be a bunch of money, whatever, but you donate stuff there. If it's then sold, there's no tax. Also, in addition to that, you get a tax deduction that year for the amount of money that you donate. And then you can, over time, could be over a certain period of years or in perpetuity, make donations to those charities or churches out of that. It could be set up ahead of time for your estate so that you say that, okay, these 3 charities are each going to get 2% out of this every year, and it'll probably never run out of money. And
because it remains invested
Yeah.
too, but you're not paying money on any interest, dividends, or
yeah, you don't
anything
pay any
that's
tax or
sold.
anything like that. Anyway, it's for people that have a lot of money that would like to set up a family foundation with doesn't have to be a ton of money, but
Mhm.
with a chunk of money, probably maybe $50,000 or more. We have people that have them that have millions of dollars in them, and they're pretty cool.
The last thing that we wanted to touch on with these gifting strategies and the way that they work is that there are limitations for the amount that you can give and deduct on your taxes in a certain year. So if you're gifting, like we talked about earlier, if you're gifting appreciated stock, the amount of the deduction is the amount, the market value of whatever the stock is, right? But you're limited to deducting 30% of your taxable income that way in 1 year. That doesn't mean that if you gave more than 30% of your taxable income, that just goes away and you don't get a deduction for it ever. You can carry forward anything that you can apply to your taxes in the current year up to 5 years. So that's the rule for if you give appreciated stock. The rule for if you give like cash is 50% of your taxable income. And again, you get to carry forward that for 5 years if you give more than that. So that might not apply to everybody, but just something to be aware of if you're someone who gives a lot and somebody who has maybe a kind of low taxable income.
So finally, Jesse, how do we maximize the impact of our gift?
Yeah, so one of the reasons that we wanted to have this webinar that I wanted to touch on really quickly is just to part of being a good steward of your money is giving, right? And being gracious with the money and generous with the money, but also part of being a good steward is making sure the places that you're giving it to are being good stewards of what you're giving. And so that's why we want to give as little money to the IRS as possible, right? And that's also why we want to make sure that the charities that we're giving to are legitimate. And not that just they're legitimate, not saying that they're scammers, but you want to know kind of where the money's going to and how can you know that? Well, there's some awesome tools online that show all of that, because when an organization is a charity or a 501, I'm going to mess this up. I always get it mixed up. C3 or 501(c), I can't remember.
Yeah.
But they have to file a form called a 990 with the IRS, and
It's
that's
like
public
a tax
information.
return, except for they don't pay any taxes.
Yes, it's public information, and it shows how much their key people are paid. It shows what their assets are, kind of how much money that they have liquid that they're keeping in the bank. It shows what their expenses are. and that kind of a thing. Now, that might be kind of hard for the average person to read. You might not want to go through the actual form, but there are some websites that look at all that stuff and evaluate it for you and can kind of tell you what it all means. And we found some of those for you guys, and I'll tell you what my favorite one is, and then I'll tell you about some other ones that you can use too.
So some things we want to look for that, I mean, because I started doing this like 25 years ago. Was trying to find out how much, because you get something in the mail that says, yeah, donate, whatever, please give some money to the Red Cross or whatever. And out of curiosity, I thought, well, I wonder what they do with the money, or, how efficient, how good of stewards they are with the money. So that's how I started 25 years ago with checking this stuff out, because I want to find out how much are they paying their people. I remember back then, 25 years ago, I was thinking about sending a check for $50 or $100 from the Red Cross, until I found out they were paying their top person. This is 20 years ago, $500,000. I thought, I didn't feel comfortable with that. So anyway, this is that kind of thing. How much are they paying their people? What percentage of their expenses are actually spent on their cause? And how much money do they keep in cash relative to what they spend?
And why is that important? Because some people might look at that as a good thing. Oh, they have all this cash, so that if something happens, they're okay.
Well, because like the way I think is, in order for me to write a check and send it to a church or a charity, it's got to come out of my bank account. Mm-hmm. Well, I'm not really that fond of the idea of me taking money out of my bank account, giving it to the charity, and them just putting it in a bank account and holding it so that they're financially comfortable. Especially if taking my donation out reduces my security or whatever. You know what I mean?
Mm-hmm. And you can look at this. You can look at that relative to what their expenses are too, because you don't want they don't need to have years of expenses sitting in their bank account and then be asking people for more money. You know what I mean?
They need a little cushion to protect themselves for a rainy day, such like everybody
an emergency
does.
Fund. We tell people 3 to 6 months of expenses.
Yeah.
I don't know, it might be a little bit different for an organization. They might need a little bit more, but they don't need years worth of expenses when they're bringing money in constantly.
Yeah.
Okay, so I want to show you guys what these websites are, and then I'm going to show you an example of how you can use this to look for the things that we're talking about that are important.
It's pretty cool.
Okay, so here's the research websites. All of these are .org websites, so if you just Google them, make sure you go to the right thing. Charity Navigator, that's my favorite one, and that's the one that I'm going to show you guys. This Charity Watch and GuideStar, they're going to want you to kind of create like a login and stuff, which I don't like, but they have some information on there that you can get. This Charity Watch one, what's kind of nice is that they have rated organizations, and this is free that you can look at. So they'll have like the top 25 organizations in each category. So there's like a health category, like a substance abuse category, like all these different causes that maybe people would want to donate to. They have these top 25 lists of organizations that they've vetted, which is nice. That's Charity Watch. And then you can actually, it's public information. You can search any charity or church that you want on the IRS's tax exempt organization search tool, and search for their Form 990 is what shows all the information. But these kind of do all the research for you and summarize it for you, so you don't have to try to read the tax form. So let me show you guys an example of what we would look for if we looked on Charity Navigator at a charity. So when you go to charitynavigator.org, this is what it looks like. You don't have to sign in or create an account. All you do is you can search for whatever charity you're looking for here. So as an example, I'm going to use the American Heart Association.
That's a big charity.
Yep, and they'll pull up, if they're listed on the site, and most of them are, they'll pull up here. And what you want to pay attention to, don't necessarily pay attention to what this website rated them and what rating it gave them, because they have all of these metrics that they use to come up with this rating, and they don't necessarily use what we think are the most important things to look at.
Good answer.
So I'll show you what to look at. You're going to scroll down. You're going to be in accountability and finance And you're gonna keep scrolling. This stuff doesn't matter as much as what we're talking about. These are all the different metrics that they look at and how they score these things. But you're gonna go down to financial metrics. That's what we want to see, okay? So the first thing that we want to look at is the program expense ratio. So that means this is looking at how much of their expenses are spent on the actual program, the stuff that they say your money is going to.
Versus how much is spent on fundraising and how much is spent on administrative costs.
So for the American Heart Association, 78% was spent on the actual program.
By the way, they take in about $1 billion a year.
It gives the amounts too that were spent.
Right.
Sorry, I'm trying to look past the camera. That's why my head's going.
So their fundraising, for fundraising, they spend 11.3% or 97 million. For administrative costs, it's about 91 million. So they're spending a lot of money on administrative costs and fundraising there. And so that may be something that you're concerned about. I've seen some that spend way more money on administrative than that. So that's
seeing a lot
terrible,
a lot worse. And a lot of these big ones seem like they're about 80%, but there's a reason why, and I'll show you here.
But here's the thing too, is they're taking in a ton of money. And so I'm just not that thrilled with,
So
$100 million in administrative expense.
Disclosure, we're not recommending or not recommending these charities. We're just totally using this as an example to show you what to look for, okay?
And it all has to do with stewardship.
All right, so the next thing that we're going to be looking at is the working capital. This is what we were talking about before. This is a ratio that's basically saying what are their annual expenses versus what they have to pay those expenses with in the bank, or what they have saved or put away. And their ratio is they have 1.62 years of expenses.
In the bank.
Yes.
So if you give money to this organization, it's likely it's going to go in the bank.
Okay, and then this is this, they'll scroll down here under additional information to see the salary of key persons. This is another thing that we think is important.
This is going to blow your mind. So the CEO of the American Heart Association is only paid for a mere $4 million. Wait a minute.
Yeah, a lot of their people are paid over $1 million. That might not be a problem to you, but if you maybe don't want to give to an organization that pays their higher up people millions of dollars
to run a charity,
it's just that it's just something that you should know. You can choose to do whatever you want, but it's just something that you should know when you're going to give your money somewhere, right? So let's look at another one.
And we're not recommending this or anything. This is just one that we're familiar with. Homes for Our Troops. And give them the rundown on that one, Jess.
Okay, so again, we're scrolling down and we're going all the way down to financial metrics, right? And we're going to program expenses, how much of their expenses are spent on the actual program. There's 88%.
So that's quite a bit higher on a lower amount of money. They don't take in near the amount of money that the American Heart Association does.
Yep. And then their working capital ratio, the amount of expenses that they have compared to what they have saved to pay those expenses, is only 0.64 years. So they're not banking a whole bunch of money and holding on to it. The salary of their key people, their highest paid person is paid this. Okay. So again, just something that you should be able to, it's public information so that you can look it up before you give your money somewhere. So you should. That's all we had for today. We don't have any questions.
Thank you very much for attending and wish that you all have a very, very Merry Christmas. And we have a little announcement for next year.
Yeah, so we're going to change things up a little bit next year. Instead of doing these live webinars once a month, we're going to be releasing some kind of shorter videos once a month that we think will maybe be, you can access them, anytime you want. You don't have to be on at a certain time. Right. You don't have to spend a half an hour with us. They'll just be, probably short definitely under 10-minute videos, very digestible. And so we're excited to come out with with that for you guys. We think you're gonna like them. If you're a regular on these webinars with us, we really appreciate your feedback when those come out of what you think about them. And
They're also
so
going to be on the YouTube.
they're gonna be on the YouTube. So a reminder, if you haven't subscribed to us, subscribe so that those come up for you when we release them and when we release little clips and shorts and things like that too.
So again, if we can be of any help to you or your family or friends in any way, answering financial questions, we'd love to. And hope you have a blessed Christmas.
Thanks. Merry Christmas.